A good time, therefore, to call our market master onto the show. Sanjay Dutt, Director at Quantum Securities, joins us now. Good morning, Sanjay. Thank you very much for joining us this morning. Well, what is the sense you are getting? Last time you said that this market looked ripe for profit-taking even to below 8,000 levels. It seemed to have found support over there, but are we still vulnerable?
Yes, definitely. I think the market is, done with the Modi rally and is now looking towards a more structural move ahead. So the Modi sentiment rally is over and it has to transform into a structural bull market backed by real fundamentals and real earnings, numbers, etc. What we've seen in the last 3 to 6 months has been change of sentiment, and that's what has taken the market up about 1,000 odd points plus minus after the elections. We're digesting those gains, particularly the gains that came in right from the 5,000 lows of end of last year. So I think yes, we do stand vulnerable to a correction sub 8,000 because this quarter, what we understand, what we speak to companies, this quarter is not looking good. Companies are still facing problems in terms of liquidity, bank credit, restructuring, balance sheet issues. And more than that, what worries me is that 50% of the world at this point of time is going through its own set of problems. Either countries are in a recession, negative phase, or countries are basically flatlined. Whether you look at Brazil, Italy, countries across Europe, Russia, Japan, whole set of problems that's plaguing them. And in this kind of a landscape, I don't see fundamentals rapidly changing in India also. And obviously this equation starts to impact the currency also. US is vulnerable to a correction because we've had a rally, so technically definitely a correction is expected there. Whether fundamentals justify or not, we can have a debate ad nauseum about it. So, in this backdrop, I think the easier path, obviously, for the markets are a correction and stability somewhere in the 78, 7,900 range or in the 8,000 range as we saw earlier. And then as domestic fundamentals, both macro and micro pan out, then we'll see action sometimes first quarter next year, say end Jan or so.
Okay. Sanjay, hi, good morning. So that's the setup for the market that you spoke about. What about this land acquisition ordinance that was passed yesterday? How much of a positive do you think it could be for some of these infrastructure companies, L&T, IRB? And would you put any fresh money there?
No, not much really, because this was more or less there in the price and we knew this was coming. Those infra companies are already pricing in. I think it all has to transform now into real numbers and action on the ground. Whatever policy action that was anticipated is there in the prices of the stocks of various sectors, including infrastructure sector. What now really has to, like I said, the Modi phase of the rally is over. It has to transform into numbers and a structural shift in terms of earnings, in terms of fundamentals. So till that doesn't happen, I don't think there is much of an upside in any of these stocks. Fine, trading upside of 5-10% here and there, that's random noise. But to be able to take big bets at this point of time, I don't think so. I think it's all priced in.
Well, if the market indeed comes to 78, 79, not a great distance from the current levels, less than 5% lower, would you tank up?
Lata, markets may come to 78, 79, but we must remember that the damage that happens to individual stocks and sectors, particularly in the mid-cap space, is much larger always. So if the markets, the indices are going to come off 5%, then you can easily expect stocks coming off 10 to 20%. A lot of froth going out. Yes, that would be a good time to start looking at stuff and buying. There also I would like to phase out my buying because, I'm just repeating this over the last 5 minutes. I need to see numbers now changing. And particularly, the banking side is worrying me. what kind of restructuring is going to happen, how, company balance sheets, and very correctly the RBI governor. In fact, I think at least never in my history of being in the markets and being in the financial system have I come across a governor who's so forthright and clear on issues, who's calling a spade, and who's understanding what's really plaguing us, what's plaguing the corporate sector, and who's actually having the, for want of another word, gall and gumption to say that, look, this is what plagues the private corporate sector in terms of layering of debt, etc., what I read yesterday. So if that be the case, I think all this takes time to settle down and all this takes time to sort out. And that's what I want to see, because till all that is not sorted out, a lot of companies have hidden problems which still they're not really facing up to it and sorting out.
But do you think, is an alternative scenario possible, at least in the first quarter of next year, when in anticipation of the budget, or simply because there is so much of currency printing globally, and because, as you said, other countries have, their own share of problems which appear to be way more serious than ours, is it possible that we are still going to reach, new highs pre-budget or thereabouts?
I don't think so. I don't think we'll make new highs. In fact, I will not be surprised if we don't make new highs in 2015 also.
Ooh.
Because, we've got to deal with our own problems, both in terms of macro issues, because today we're already seeing reality in terms of what the deficit is going to be like, what the revenue numbers are for the government, what needs to be done in terms of implementation, what needs to be done in terms of corporate profitability and balance sheets. So to forecast that we'll see a 8,700 or 8,900, it looks difficult right now unless something radical happens in the next 6 months which transforms. And I think the only thing that I foresee that can happen is that very aggressive inflow of long-term money into Indian markets, opening the floodgates into various sectors, where serious FDI money starts coming in. And that doesn't happen overnight, that takes time. Till that doesn't happen, balance sheets can't be set right. Till that doesn't happen, the inflows, the dollar rupee, those kind of equations cannot be set right. So therefore, I think 2015 in terms of a broader market is going to be a struggle. Individual opportunities, of course, there'll be many opportunities will give you 40 to 50% return. But to say the index is going to be 9,000, 9,500, no, I don't think so. Or maybe make a new high, I don't think so. I think it's going to be a year of consolidation, which is contrary to what most streets and pundits and of the markets are all projecting their targets of Nifty and Sensex. I may be wrong, fine. I'm entitled to change my view in case something changes. But as it looks right now, I think it's going to be a struggle, really.
So where are these individual opportunities in specific sectors? Sanjay, if you can elaborate, because at this point in time, it looks like a struggle to get leadership from any quarter.
I think any company, any good corporate house or business family with a track record who's recognized the problem that they need to restructure, reorganize, slash debt aggressively, get lean, I think that's the opportunity. Anyone who is restructuring himself now aggressively, selling assets, going out and raising money, going out and doing strategic deals to set right its problem and actually being ready for a big bull market ahead, not in terms of equity pricing, but big bull market in terms of the India opportunity of growth and real numbers, that's where the opportunity lies. Anyone who's aggressively getting down to restructuring right now, I think those are the companies one would need to look at and back and study the proposals that they're going through. We're already seeing some happening. We're already seeing shakeouts happening across sectors. I'll just give you one example. For instance, look at SpiceJet. Of course, disclosure, I have no positions there, neither do I have any interest in the airline business. The fact is that people are recognizing the problem. Even after oil at $60 or $55, we are not able to run that airline or the industry in a profitable manner because it's got its own set of problems. But actually people are coming forth, setting it right, distress funds or whoever it may be, new management's coming in. That's where the opportunities would be. Look what Jaiprakash is doing. May not be enough. We may all have different views on it. But anyone who's understood that the only way to survive is to accept the reality and start aggressively sorting out things, I think that's where the opportunity is. One needs to look at those kind of companies where equity values are very low, debt is extremely high, assets are good, but companies are now aggressively getting into restructuring.
Okay. Take your point, Sanjay. Just a final quick question. Is there even a tactical buy in the PSU banks because some rate cuts are in order? Or do you think that expected rate cuts is better played through the debt market?
No, I think there'll be tactical buys. Lata, no doubt about it. Let me just correct myself. I'm not trying to paint a negative picture here. I'm just trying to, look at the canvas from a little longer term than just what's going to happen in the first week of January or next week when I wake up on 1st Jan 2015. I'm trying to play out what it's looking to me in the next 3, 6, 9 months, 12 months, So, of course, in between we'll have trading rallies. We went down to 8,000 and suddenly we're back at 8,300. So those kind of, tactical moves, trading positions, rent a ride on a stock, those kind of things will go on. So therefore, I'll definitely get a rent a ride on the bank Nifty. Because in anticipation of an aggressive rate cut, once again we're reading today the finance minister putting pressure or talks of pressure. I don't know how far the press reports are correct. So therefore, you will see rallies coming in because you've seen the bank Nifty correcting or the banks correcting in the last few days, and you will see a bounce of 5% in some banks. Those kind of trading rallies will be there. But I'm just talking from a broader portfolio front and over the next 6 to 9 months, what people need to really look at in terms of realities and not, tone down their expectations and not just be totally gung-ho that we are in a new bull market in India, every dip needs to be buy-in just because 100 points is down today, so why not a buy, We just need to be cautious of that mentality.
No, that caution is very welcome. Thank you, Sanjay, for joining us. And you have a great New Year. We'll, of course, see you a lot more in 2015. But Happy New Year to you in advance.
Hopefully.
Thanks for that.
Thanks so much.